Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I am Alfie Townsend, Southwest Florida certified financial planner professional, here with Pastor John Antonucci. And John, it looks like we got the first deal in the signed and delivered, hopefully, and we'll talk about that, and maybe other countries are going to follow up.
Yeah, first of many to come. And good morning, Southwest Florida. I'm John Antonucci, joined by certified financial planner, professional, author, and fiduciary Alfie Townsend. You know, today's show is packed with insights to help you thrive. Whether you're 5 to 10 years from retirement or you're already enjoying it, grab your coffee, get a pen. Be sure to jot Alfie's number down, 239-747-1077. Before we dive into the market update, don't forget Alfie's book, Making Waves in Retirement, is available by popular demand. It's filled with real-life stories, proven strategies, and powerful insights to help you retire with clarity and purpose. To get your complimentary copy of Alfie's book, simply call the operator and ask for it, or text the word book to 239-747-1077. That's 239-747-1077. Claim your free copy of Alfie's brand new book while supplies last. 239-747-1077. And Alfie, it's Mother's Day weekend. Happy Mother's Day. I know you want to wish all the moms out there a happy day.
Oh yeah, happy Mother's Day to all the moms out there, like you said. And my mom passed in 2016.
Wow.
Yeah, it's been that long. Yeah, can't believe that. But anyway, my son Devin has a great mom, Tommy, and we're going to take her out to dinner. We'll go to, I think her favorite restaurant, believe it or not, is Dock Ford.
There you go.
She loves.
That's where we're going to be Sunday.
Are you?
Yeah.
Okay. We'll be probably spending time together again. Sounds good. You should have let us know. So happy Mother's Day. Yeah. And the market update, we got a lot to talk about on the markets. You know, we have a lot of geopolitical developments out there, but the tariffs was one good thing. We kept saying, President Trump needs one deal to just get it inked, and we get that one deal, then other ones are going to follow, and it looks like good news. It was confirmed this past week that a full and comprehensive trade deal with the United Kingdom. So this is good news. Markets liked it, and then if you think about it, China is the one that's really the deficit that we have, that $1 trillion deficit, is like a third of it comes from just China alone. So that's the one that they're really after, and they are meeting over this weekend over in Switzerland. So hopefully something will come from that. We'll see.
Sure it will. Yeah.
But China is hurting though.
Yeah, they are. Well, all indications they want to make a deal. They're at the table, and he also said that he's not going to cut the tariffs while negotiating, so he's going to keep the pressure on. Yeah,
why? Yeah, because if China's a country that if you did cut the tariff, they're going to say, okay, they're breaking.
Yeah,
USA's breaking. We're going to just keep it like this. But any deal with China, John, is a deal.
Yeah, it's going to be
right, because right now, the deficit is, let's say, $350 billion a year. So if we can save, $100 billion, that's the deal.
Well, don't forget, last time he made a deal with China, then COVID broke out. So let's pray nothing like that happens.
Yeah. Oh, you got that right. I think they're preparing for all this stuff, and I think war would happen if that happened this time.
Yeah, probably.
it just doesn't. That was awful. We did have some good news about jobless claims last week. They fell more than expected, down 13,000 to 228,000. Despite the uncertainty about the trade policy, it's the economy is still rolling pretty good, and the contraction in the first quarter, they're going to revise these numbers, I hear, in that first quarter, and I think they said it's going to be up.
Wow.
Because it contracted. That means if you have 3 quarters of contraction, you're in a recession. And it looks like I heard, I think Bassett said, Scott Bassett, Treasury Secretary, that they're going to revise those, and it could be as high as 2% up. So if that's the case, we're not going to be heading in that recession. So, good things are happening. Yes, the Federal Reserve, they did meet this past week, and of course we knew they weren't going to cut rates. It's just they're just not going to do anything in a hurry if Trump's the president there. I don't think they like each other. But I don't think it's politics right now. I think he is in a hard spot right now, the Fed chairman, because we do have inflation still. The economy's doing okay. Numbers are up for inflation. So do you and these tariffs? The tariffs are uncertain. That's going to create more inflation, supposedly.
Well, if the tariffs come off, he's probably going to start having to cut rates. When you think, because then
you would think so.
Buying like crazy.
Yeah. Yeah, I think, and then the home sales are just not there.
Right.
Home sales are not there. You got to get these. You got to make it where customers can, consumers can buy a house again.
Yeah, I think 4% if you can get there. But you won't get there this year, I don't think.
Yeah, 4% for a home. 5 is not the worst thing. That's not bad at all. You just can't have that 7 and 8%. It just doesn't work on that. So good things are happening, and I just the golden years are here. I think they're going to it's going to take a little bit of time to get things rolling, but the momentum is going to roll, and once it rolls, it's going to be a Trump train. I think it's going to be it's going to be huge.
Yeah. Well, we'll see what happens this week when he's in Saudi Arabia and over on the other side of the pond there and making deals and mineral deals with Saudi Arabia as well is going to be a big thing.
Oh yeah, there's deals everywhere. The guy is,
he is the art of the deal.
He really is. If you've never read his book, The Art of the Deal, I read that back in, I believe it was '89 when it first came out, and it was really the first book about negotiation. How to do it, and I need to read it again because it was that was so long ago, but it's still. Did you send me that? It was like 64. It was a clip of 64 ways to negotiate.
No, I didn't send that.
Oh my! I got to have Devin or Tommy find it. It was priceless.
Yeah,
it was so
that's what
good.
He was doing with Carney. I mean, you shoot for the moon. Carney kept saying we're not for sale. Canada's not for sale. And he said, never say never.
Never say never. You're right about that. Well, never say never. Now, if you haven't really had your portfolio checked out, this is the time to do it. There's so much going on. You don't want to miss the opportunity because when the market comes back, you want to be in the right sectors. You want to be in the right holdings. And let us look at what's going on. It's called the Retirement Simulator. We can look at everything, show you what your fees are, show you if you're, international stocks, small cap stocks, large cap bonds, whatever you're holding, we'll be able to, let you know. And then we'll run a side-by-side comparison of what we can do versus what you currently have. And I think most of the time people usually say, man, I'm glad I came in. So hopefully you can John will give you the number and set up a time and let us do a review on what's going on to put you in a position to really reap these rewards that we're going to have later on this year.
Yeah, Alfie can meet with you in Fort Myers or Naples, and Alfie has put together a computer program called that Retirement Simulator Process. Listen, he can only handle 9 people per week because it's such a deep dive into your current portfolio to see what's really going on. As he said, he's going to expose all the hidden fees that just the savings there that could be eating up your returns each and every year could make the difference in your portfolio over the long haul, especially if you're soon to be retired or even currently retired. It's going to make sure you're allocated properly, diversified correctly, not taking undue risk. He has a computer program that will tell you what your risk factor is so that you can put together an asset class and a mix that is comfortable with your retirement goals and strategies. Listen, be one of the first 9 callers right now. You can't hesitate. You can't wait to the end of the broadcast. Pick up your smart device. Call the operator. Tell him I want to meet with Alfie in Fort Myers or Naples. He has 2 beautiful offices. Or text the word VISIT, V-I-S-I-T, to 239-747-1077. You owe it to yourself, even if you have an advisor for many years, to get a second opinion, a second pair of eyes, and not just any eyes. Alfie Townsend is Southwest Florida's premier financial planner professional. Over 40 years, 40, experience as a fiduciary and a certified financial planner professional. Let Alfie guide you to and through retirement. That's his goal, is to get you and keep you retired for the rest of your life. 239-747-1077. Pick up the phone, tell the operator you want to visit with him, or text the word visit to 239-747-1077. Do it right now. Don't hesitate. Don't procrastinate. Stay tuned. We're going to be right back right after this break, so don't go away. Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. You know, if economic uncertainties have put your financial decisions on hold, you really need to grab a hold of Alfie's toolkit that will help transform your worries of retirement into confidence. Listen, if you go to Saving the Investor on YouTube radio, you'll be able to see us, and you'll see parts of the toolkit as we're sitting around some of these books that you will get in your possession. It's a wide range of materials, such as Will Your Money Last as Long as You Do? Are you paying too much taxes in retirement? The Social Security Decisions Guide. When is the opportune time to maximize your Social Security benefits? You need to get a hold of this complimentary toolkit. It's free. Pick up the phone, call the operator, or text the word KIT, K-I-T, to 239-747-1077. Pick up the phone, text the word KIT right now to 239-747-1077 and get your free complimentary toolkit from Alfie Townsend. You know, Alfie, the U.S. economy, as you said, contracted in quarter one. You know, the market has been mixed. It really hasn't had big gains or big drops. It's pretty steady, but most of the losses have already come back, haven't they?
Yeah, from when he first was talking about these tariffs, and this was a big shock to the market. It was, and markets don't like uncertainty, and that's exactly what happened. President Trump said, "Hey, we're going to be putting 25% tariffs. We're going to start there," and markets did not like that. The markets really tanked. And this was in April, and it was like the worst April, I think, since the 1930s or something. It was bad. But what the markets do, they come back, and that's what happened. Markets came back, and we've had a nice little run up on the markets. And again, once this, we're talking about United Kingdom. United Kingdom is is big. They're the ones that came to the table first, and then you're going to have other countries starting to follow. They're, like we talked about, they're meeting in Switzerland with leaders of China. So China is, they're the biggest manufacturer out there, and they need business.
By the end of May, they've got to wrap this
I
up.
think they let a lot of people go right now. There's not enough work for them to do. And the good thing about it is you have companies like Apple that have always made all their phones, majority of their phones over there in India, but they're putting $500 billion into factories over here. So if they start doing that, you have companies starting to build over here. Yeah, I think every pharmaceutical company needs to bring it over here.
Definitely, especially the life and death stuff, antibiotics and things.
Antibiotics, and ibuprofen. I could use one right now with my back, but I mean that's 90%, 95% is made over there in China. So why not bring that over here? So you need to bring, cancer drugs, all these different diabetes drugs. They all need to be made over here, and even if it costs more, you gotta do that for the safety of our country. Peace of mind.
I would pay more, for products.
Oh yeah, you would definitely do that. So let's talk a little bit. Like you said, the economy did contract a little bit. Now this week we talked about the equity markets were mixed. We had some up days, some down days. Feds do caution that they're not going to act right away. The consumer and industrial stocks lagged, and then you had bond markets slipped a little bit. So you have the bond yields slipped a little bit. So they have gold is just running like crazy. I've never seen gold do this in my, it never got over 1,800. Now it's at 3,400. It's every day it's up. It seems like, and that was just never an asset that was a good asset to buy. We do have some of it in some of our portfolios, but again, you cannot go crazy with gold, because right now what they're saying why gold is going is doing good is countries right now are investing in gold versus a 10-year Treasury. And that was a safe haven, the 10-year Treasury. But now they're putting in gold because if there was confiscation of, hey, we're not going to pay your treasuries if, with the U.S., being able to say, hey, we're holding your treasuries. If you don't do this, where the gold, they're not holding the gold.
Yeah.
So the countries are leaning more towards gold, not to have a country that can say, hey, listen, you do what we say or, you don't get these treasuries back. But it's never really been like that, but that's what they're saying is that gold is it's making more money now than treasuries, but it's also they hold the asset.
Yeah, but if you pay $3,400, like you said, and it goes back to 18, you're going to get hurt, aren't you?
Yeah, that's the thing. You just don't know how, what's going to happen if you get the digital currency. You look at, the Bitcoin is going crazy again. You have you have a lot of different currencies out there, but the dollar is devaluing a little bit. Now, what does that mean when the dollar devalues? Trade deficits, it helps with the trade deficit. It costs us more if we're going over to Europe to buy stuff, but then they like to buy stuff from us because their money is worth more now. So
the euro maybe will balance out, being they made this deal. The euro is what about 20 cents higher, isn't it, than a dollar?
13 right now. It's 13 cents. So it's it is. It was at one time when the euro first came out. It got $1.60. Yeah, crazy. I think that's when you went to. I think you went to Europe. It was $1.60 versus our dollar. So, but it got down to like $1.02, $1.03. And now it's made some ground up, but again, that will help the deficit a little bit with a weaker dollar, but it costs us if we're going over there to buy things. So a lot of things happening, and the thing about it is this: we're going to talk a little bit about Warren Buffett. He is stepping down from Berkshire Hathaway, and the reason why he's stepping down, well, maybe because he's almost 100 years old.
94 years young, no. No, not bad.
He's got a mind. He's got a mind. So
much for retiring at 65. Right?
Yeah. So I'm gonna have John talk a little bit, and then we'll talk about Warren Buffett a little bit.
Yeah, one of the things that you want to really position yourself with is what's going to happen after all these deals take place, because then the market is going to begin to rock again, and you want to be positioned. So listen, if you're on the sideline, if you're sitting in a 4% CD, Alfie Townsend has so many different types of products and services here at the Advantage Retirement Group that can put you into many different avenues of retirement planning and strategies that maybe you haven't thought of before. Maybe Alfie will talk about the structured note in just a minute, but you really need to get a hold of Alfie, sit down with Alfie, make an appointment to just talk with him and see if he can put you in a direction that will get you a better plan and strategy towards retirement if you're 5 to 10 years out, or if you're currently retired, maybe there's ways that you can maximize what you have already that can put some more cash flow and income in your pocket each and every year. You'll never know if you never visit with him, but it's so simple. He has 2 beautiful offices, Fort Myers or Naples. All you have to do is pick up the phone, call the operator, or text the word VISIT, VISIT, to 239-747-1077. Do it now. Don't hesitate. Pick up the phone. Be one of the first 9 callers right now, 239-747-1077. And Alfie, when you talk about different avenues of investing, you have structured notes for people that are in a 4%, CD, which really isn't that much.
Yeah.
They could get pretty much double that, can't they?
Yeah, these structured notes are considered a conservative to a low-end moderate type of investment. So we're not talking about something that is going to increase your risk crazy. One thing you have to do is let it sit there. They're 21-month-long notes. That means that they're tied to, they look at the S&P and they look at the NASDAQ. As long as they don't go below 30% from when you got in, which is a big drop, you're going to get your interest each and every month. In addition to that, they usually call these notes after 1 year. We put in there something called a no-call feature. That means they can't, like a Bank of America or Citi, they can't ask for their money back for at least a year. Now, if we didn't put that in there, we could get you even higher than that 8.5%, 9%. We could get you probably 10%, but they'd be able to call that note anytime. So we want to make it where they cannot call this note. So if you're looking for income, this is we can create income for you. We have something else that's called a tender offer that is, it's based on options and everything. Again, a moderate type of investment to low end moderate. And this is, some of these, this is called a credited investor. You have to have a certain dollar amount and you have to have a certain income. But this is paying 15%. Now, everything I'm talking to you about, I have myself. So I'm not giving, I always do it first. And these are things I've had for quite some time. And if you're looking for income, this is a great income vehicle. If you think about, if we can get you 15%, and that 15%, if you need $150,000, that's only $1 million to get you $150,000. Usually $150,000, you would need about $3.5–4 million almost in a portfolio to be able to get that. So these are things that we can do here, and we'll look at what you have and create that income plan and grow that money. We do some serious planning here, and by doing that, we're able to create income with a lot less money, so your money's working for you, really fighting that inflation. So if you want to know more about it, give us a call here at the Advantage Retirement Group, and you stay tuned. We're going to talk about Warren Buffett on the other side. Welcome back to Saving the Investor. This is Alfie Townsend, Southwest Florida Certified Financial Planner Professional. Again, I am here with Pastor John Antonucci, and we've been talking about the market this past week, talking about the great deal that was inked this week with United Kingdom. And then we also talked about, what we're going to be talking about, I think you're going to want to hear, is Warren Buffett. Everybody loves Warren Buffett. He has the great saying that you always said.
Yeah, be fearful when everybody's greedy when everybody's fearful.
Is that the truth? That's one of many, but that is so true, because if you think about it, what he says, you got to be fearful when everybody's greedy. So when everybody wants that gold because it's at $3,400, be fearful.
Yeah.
And when that thing starts to come down, then you got to be greedy and buy some. So don't just go buying at the top all the time. That's selling at the low, buying at the top. That's not a good strategy for success, and that's not a strategy that Warren Buffett had. And even Warren Buffett said he had many disappointments with stocks. But everybody, what they do is they see his success, John. And they see that they have, they think everything he touched was gold. No, it wasn't. There was some stuff that he bought that he shouldn't have bought. But he was diversified enough that his good outweighed the bad. You're always, don't be afraid. A lot of people sit on that sideline because they feel like, I don't want to lose. But if you have a good plan in place, you're going to lose some. But as long as you make more than you're losing, you're going to stay ahead of inflation and you're going to have success. Yeah. And that's where what we do here is we're going to keep you from making those, like Warren Buffett said, these emotional decisions that are just based out of fear. And a lot of people are not. I can't tell you how many people we made so much money for when they didn't want to put money in the market during Biden years, because they didn't like the way the economy was going, the country was going. Mostly, country was heading the wrong direction. Boys playing girls' sports, going in the women's locker room. I mean, things were not normal. But I said the market's bigger than that. We've always said it's bigger than that.
People still do business, don't they?
People have to still buy goods and services. So this is a good thing to have someone that's on your side. There's many advisors out there that will tell you, listen, we got to get out. Matter of fact, there was one that I was listening to. He was an investor, and he was on one of the money shows on Fox, and he was saying that his account went down $750,000. His advisor told him to put it in. Let's get out. Put it in 10-year treasuries right now, because it's going down too much. We'll save that. And he's not even near where he is. He got back in, but he's not even near where he was. He would have if he did nothing, he would have made the 750 up and be up another 750,000. in this short amount of time if he did nothing. So don't let people tell you things that if your advisor is scaring you, or if he's scared or she's scared, that's not the advisor for you. That's not the advisor for you. We're not going to scare you. We're going to give you a plan, and we're going to stick to that plan. We're going to adjust the plan, but we're not going to go to cash.
Yeah, well, we're talking about Warren Buffett, who's been in the market his entire life, and at 94 years old, he's made billions and billions of dollars.
Yeah.
You know, and he's going to be stepping down at the end of this year, 2025, from Berkshire Hathaway, and he's still as sharp as ever, Alfie. And he, you know, what a legacy that he's left, isn't it?
Oh yeah, I mean, you know, it's unbelievable. He's 1.1 trillion. He's like the seventh largest holder of the S&P 500. He's
He built some company there.
He's built a great company. I think one of the companies he bought at a very early was Geico. You know, he owns Geico, and there's some serious companies. I think one stock right now, it's like $800,000. You know, one stock.
Wow.
One stock. And my buddy, this is John.
How do you buy that?
Well, this was John. He was an engineer. He ended up running the engineer department of University of Maryland, and we played tennis all the time. And I remember, this is back in the 90s. I remember he told me he paid $14,000 for one share of this stock, and I'm like, you know,
Yeah.
and I was thinking he was crazy. This was back when. 14,000 for one share, I'm thinking, and look what it's worth now. It's so he is multi-millionaire from it.
Yeah.
And that's the thing. So you can have wealth creation. We've had people come in here that bought stock at a very low price, and it creeped up. There's people that are millionaires that would have never been millionaires if they didn't take a chance.
Right.
And so. But yeah, Warren Buffett is definitely very, very good at what he did, and he said he's gonna stick around. He's definitely gonna stick around. Where if the new CEO is going to, if he needs them, feedback, and someone like that, you want feedback all the time. You don't want to just I think when you're at 94 years old, you might feel like if you quit. If you step down, you're going to die.
Yeah.
Because that's what
94.
He's 94.
Well past
He's well past. But he feels like maybe he's not going to be the one that will step back and not do anything. Yeah. And he didn't make his wealth until he was in his 60s. Did you know that?
No.
Yeah, that was where he made his biggest wealth, when he was like 61. So don't think you can't make wealth.
Right.
I mean, you can make wealth, and people that don't want to change, maybe you won't make wealth. But if you're willing to change, give us a call and just let us show you what we do here at the Advantage Retirement Group. We can show you things that you're probably not seeing elsewhere. We can show you income. We can show you growth, our growth portfolios, our income portfolios, and we can show you our tax savings portfolio. We can show you things that can protect your principal if that's what you're looking to do. So give us a call. Don't be that person that's afraid to dial that. You don't dial anymore. You press those buttons, or you can just go online and set up an appointment. But John can tell you how to get a hold of us, and we'd love to really show you what we do here and do a side-by-side comparison.
Yeah, well, Warren Buffett was 60 years at the top, and he helped shape modern investing. Alfie Townsend is 40 years at the top as a certified financial planner professional, and he's on the cutting edge of investing. He has products and services, new ones all the time that he takes advantage of. He has proprietary products that you can't get from just an average firm because of his fiduciary and the type of things that he does here at the Advantage Retirement Group. You owe it to yourself to sit down with him in Fort Myers or Naples. Pick up the phone. Be one of the first 9 callers right now. call or text the word visit to 239-747-1077. Take advantage of that retirement simulator process. It's a deep dive into your current portfolio to see what's really going on. You may not know there's many hidden fees that could be eating up your returns. Alfie will find them and show them to you. He's going to make sure you're diversified correctly, allocated properly, making sure that you're rebalancing in your portfolio so that you stay the mix of the asset classes that you are comfortable with your risk factor. And he'll even do a risk analysis, a riskalyzer, to see exactly what your risk is. You owe it to yourself to meet with Southwest Florida's premier financial planner professional, Alfie Townsend, 239-747-1077. That's 239-747-1077. And Alfie, he's built an incredible company. You talked about you've built an incredible company, and the reason why it's an incredible company is because you do what's best for your clients. Yeah. And each client is different, and their plans and their goals are different. And really, you customize and make an income plan and a strategy that's tailor-made to each person, don't you?
Exactly, John. People come in, and everybody has different situations. I'm co-writing a book with an attorney that's going to be out later this year. And we're going to, as I'm writing it and reading it, I'm reading his sections. There's a lot of, there's trust. There's so many different types of trust out there. And so it's definitely everybody comes in, they're going to need either, a grant, a SLAT, all these different community property trusts. And so there's different situations for absolutely everybody. And when it comes to investing, everybody's risk is different. Some people don't need income. Some people just want growth. Some people need a lot of income, don't care so much about growth. So you can't just do one thing for everybody, but that's what we do. We'll look at it, look at your situation and say, hey, can we put you in a better situation than what you currently are? And if if you have 401ks at work and you're over 59 and a half, and you're still working, you are allowed usually 9 out of 10 times to take that 401k and roll it over, and you control it yourself. When you control it yourself, roll it into your IRA. It doesn't cost you tax dollars. It rolls over, and then we can help you invest that money in different vehicles that you don't have with a 401k. A 401k, 457, these are plans that you can roll over and really control it yourself, even though you're still working, and you still get your match and everything else on your other monies that you have there. But this is a great way to really control your destiny if we want to do some Roth conversions, if we want to invest in things that are giving you different types of income, or whatever you're looking for, we can handle with that, where you cannot do that in 401k. So if you have an old 401k, maybe you're not even working there anymore, and you left your 401k at work, that's a no-no. You want to take that, give us a call. We'll show you how you can roll it over, no tax consequences, and then we can invest it with so many more different options than what you currently have. 401ks, they have just a handful of options, and they all duplicate each other too. You might have a Vanguard account, Vanguard 500, and you might have a Fidelity 500. Same thing, same companies holding in there. So you want definitely control your destiny. So give us a call, and we'd love to help you out. We're going to talk more about Warren Buffett and some of the other strategies that we do here at the Advanced Retirement Group. We'll be right back.
Welcome back to Saving the Investor with certified financial planner Alfie Townsend. We're diving into a conversation that's not just about investing. It's about the life you've built, the legacy you're creating, and the leadership it takes to protect it all. And a few people embody that kind of leadership better than Warren Buffett. At 94 years old, he announced that he's going to be stepping down as CEO from Berkshire Hathaway at the end of 2025. And we've been talking about his succession, his purpose, and generational wealth. And before we dive back into that, Alfie's book, brand new book, Making Waves in Retirement, is available for you to pick up a complimentary copy. All you have to do is call the operator or text the word book to 239-747-1077. It's filled with timeless strategies, inspiring stories that speak directly to the kind of legacy-focused planning we're talking about today. Just pick up the phone, Call the operator, tell them you want the book, or text the word book, B-O-O-K, to 239-747-1077. And Alfie, one of his quotes that you love is, our favorite holding period is forever. He's a long-term thinker, and so are you. You don't market time, track record invest, or stock pick.
Yeah.
You want people to pretty much stay in, because if they stay in, that's the best way to create wealth, isn't it?
It's time in the market, not timing the market. Yeah, that's what he always says. It's time in the market, not time trying to market time that market. And market time is so hard to do, and that's where a long-term investor. Yeah, you're going to make changes. But long-term investing is something that you're going to be planning on holding for some time, and that's why he gets these quality companies that he's in, because these are companies that he plans to keep. And if you're planning to keep them, that's why you're buying them. So now you might have a company that you say, you know what, I think it's going to be a hit, but then it could go down. You could play with some stocks that you're going to be day trading. Yeah. But your long-term investing should be like Warren Buffett says, it's time in the market, not timing the market. And again, quality value companies that you trust in, that you do your research. And that's what we do here at the Advantage Retirement Group. We pay managers to do the research to find the companies. So a lot of people have what we call the S&P 500 index, which is 500 companies of the S&P 500. These are your large companies. And what we do is we have our managers that will look at about 50 to 55 of these companies that represents the proportion of those 500 companies, but you're going to own only 50 to 55 companies. And what makes that good, I think that's called a separate managed account. They can, if let's say a company wasn't doing good and we want to get that company out, we can take that company out because we only have 55 companies. That would really never happen in the S&P 500. They always all stay in there, the good ones, bad ones, and overall, you're hoping to do good, because you have 500 companies. But when you have 50 companies that represents these 500, it's a big difference. You can really get rid of the companies that are dragging down the S&P. There's a lot of companies that drag down the S&P. You don't have to own those companies. You can own the winners of the S&P. So
similar to NASDAQ too, right? I mean,
we do exactly. We do.
Yeah, all NASDAQ.
Yeah, we do that with NASDAQ also. So these are things that that I would rather, when you open up your statement, your Fidelity statement, that's who we use as a custodian. So we never. That's something I should probably talk about.
Yeah.
As
Bernie Madoff, right?
Yeah, as a fiduciary, our job is to protect you every way we can and put you in things that is for your benefit, not our benefit. So that's what fiduciary is all about. But the other thing is, we use custodians like Charles Schwab or Fidelity. We have more in Fidelity than Charles Schwab, but what Fidelity does is they are your protector of your money. They're the holder. So even though it's our portfolios that are sitting in Fidelity for your benefit, you're the only one that can touch your money. If you say, Alfie, I want to take out $100,000, then we call Fidelity and then we take care of it for you to get that $100,000 out. I just can't go and grab $100,000, take it out. But like John was talking about, Bernie Madoff, his deal was, you made it out to his company.
Yeah, that's crazy.
And he could do whatever he wants to do with that money. I don't know why anybody, would ever do that.
High-level people did it.
High-level people did it. Yes, they did it, and even
we had somebody in Naples that was doing that years ago.
Yeah.
Remember?
Yep.
Yeah.
And so, this is the part that you have to, there's a lot of trust what I do. This is you have to trust whoever you're putting your money with, because this is your life savings, and that's why we do everything we can to safeguard your money, and putting it with a custodian, that safeguards it, because we don't have access to it, and that's what you want. We just have the opportunity to put portfolios in there, make changes to the portfolio, but do not have any access to touching your money. So that's number one. You definitely want to do that. But in the meantime, you also want to make sure you have things that you cannot get on your own. We always talk about our tender offers, our structure notes, our portfolios. These are accounts that you cannot just get on your own. And a lot of people come in and the way that they invest, I tell them, you're investing like your grandkids. What do you mean? Well, they can get the same thing that you have with $1,000, and you have well over $2 million, and you're investing like you have $1,000. So once we show them these portfolios, and I always said I want things that other people that you just can't get on your own. If that's what makes it special. You want things that, hey, you got to work for it to get it, and what you're working for it is knowing us to get you things that you just can't get if you go directly to Fidelity or you go directly to maybe an advisor that it doesn't have this type of accessibility.
Yeah, one of the things Buffett said was price is what you pay, value is what you get. If you want value added to your life and to your portfolio, you want to deal with Alfie Townsend, get a second opinion. Even if you've dealt with your advisor for 10, 20, 30 years, you owe it to yourself to sit down with Southwest Florida's premier financial planner professional. Alfie Townsend has over 40 years' experience as a certified financial planner. He is Southwest Florida's premier financial strategist. He will put an income plan and a strategy together for you. He has built a computer program called a retirement simulator process that will take you back 5 years. You'll see side by side how his portfolio would perform next to yours, and you'll see it right on a computer screen, and it's going to tell you exactly what would have happened if you went with him 5 years ago. But why wait? Take advantage of Alfie's wisdom, his knowledge, his insight. Get together with him in Fort Myers or Naples. We're about to go off the air. You need to be one of the first 9 callers right now. That's all he can handle this week. Pick up the phone, call the operator, or text the word VISIT, V-I-S-I-T, to 239-747-1077. He'll visit with you in Fort Myers or Naples. You also can visit him on the web. Go to his website, savingtheinvestor.com. Again, savingtheinvestor.com. There's a wealth of information about Alfie, his company, and all the services that he offers here through the Advantage Retirement Group. Again, if you want to watch us and see us, you can go to the YouTube channel, Saving the Investor, and you can watch many of these broadcasts and topics that maybe you're interested in, whether it's the portfolio strategy or rebalancing or allocation or diversification. You can pick on all these topics that will give you more information, because information will help get you to and through retirement.
Thanks, John. And again, it is Mother's Day weekend, and we love all the mothers out there, and we hope you have a great special day, because that is your day. So I hope your kids are taking you out to a nice dinner or getting you flowers, getting you something, because you deserve it. And thanks for listening here, Saving the Investor. Like John was talking about, you can go to our YouTube channel, Saving the Investor, and watch some of these iPods that podcasts that we've been doing, and Devin's been really working hard on them. And in addition to that, there's a lot of information. If you go to our website, Saving the Investor, there's a lot of information you can download. If you have like large IRAs, if you have if you want to avoid taxes the best way you can, of course, legal. Or if you want to get like a free book, you could do that. There's a lot of things you can do. There's a lot of information over there. And if you've never seen our TV show, it's on NBC too. It's our NBC. I think they NBC and ABC sort of work together now. It's a little bit strange, but anyway, we're on NBC right after Meet the Press at 11 o'clock. Every Sunday, 11 to 11:30, and of course right here on 92.5, and we've been on this station for many, many years, well over 10 years, and we are loving it. Jake the Millennial helps us out, and he's a bigwig now. He did get his big promotion over there. He runs that whole operation over there now, so I'm proud of him. He's done a great job, but I hope everybody has a great weekend. Again, happy Mother's Day. Be blessed.